The purpose really is to help Britain achieve net zero. We've got a Clean Power Action Plan 2030, and the contract for difference is one of the ways that can help get new renewable projects built.
When that customer signs that PPA, it allows the project then to go and build. And you're really making a difference because you're bringing new renewable power onto the system, which is going to displace gas.
Welcome to the Talking Power podcast by the Energyst and EDF. Today we're going to be looking at navigating the PPA landscape, CfDs versus corporate PPAs. I'm joined today by Tom Abbott from EDF.
Hi Tim, I'm Tom Abbott, PPA Director at EDF. So we're the largest buyer of renewable power in Great Britain through power purchase agreements, or PPAs for short, buying from all sorts of renewable generators. And within that, we do a lot of work on corporate PPAs as well, facilitating corporates buying renewable power directly from renewable developers.
And Andrew Peyman from Innova.
Yeah, hi Tim, I'm Andy from Innova. I'm Head of Energy Sales there. We're a renewable developer, so we have a number of solar sites and battery storage sites. And so we work with people like EDF and other suppliers to find routes to market through various means, and one of which is PPAs, another is CfDs.
And so we've heard a lot about corporate power purchase agreements as a route to corporates to support renewable development, build and new renewable projects. But what's the alternative options for developments, the contracts for difference? How does a CfD work in this context?
In terms of what is the contract for difference, it's basically the latest iteration of renewable subsidy or support mechanisms from the government, and the purpose really is to help Britain achieve net zero. We've got a Clean Power Action Plan 2030, and the contract for difference is one of the ways that can help get new renewable projects built. And it can help renewable developers because it can guarantee them in some ways a fixed price, which is what they need to get investment approval for those new projects. The government runs auction rounds. They tend to be once a year at the moment, where it invites renewable developers such as Innova to submit their renewable projects, kind of bidding a strike price. And then based on government's ambitions and budget, they award those contracts for difference to the winning projects.
And it's only recently the CfDs really sort of come back on the agenda, I think, for solar sites. So, if you look back sort of 2 or 3 years, the CfDs weren't really that strong. Price was relatively low compared with costs. And so we, as a developer and independent generators, were relying a lot on other markets. And so the corporate PPA market was pretty attractive. Corporates were offering long-term fixed prices that we couldn't get elsewhere. And that's why, companies like us put a lot of effort into corporate PPAs. What we found last year with auction round 6, AR6 as it's often referred to, is it was a really strong auction for solar farm and onshore wind as well. And the price that we got was really attractive. And so that's where kind of the focus is now for developers. And I think what the other thing that's happened in the meantime is market price has fallen. So it means the price that the corporate is willing to pay is slightly lower. And so it's just created this, this position we're in at the moment where PPAs just aren't getting away to the extent that they used to.
So why does a renewable developer need one of these two options, the CPPA or the CfD, to develop a new renewable project? Andy?
Yeah, that's a really good question, Tim, and we're often asked that by off-takers. Why do you need such a long-term agreement? The simple reason, or the simple answer, is it costs a lot of money to build renewable projects up front. So unlike, say, traditional thermal assets where maybe there was a lower build cost, but there was a cost to run the site as you move through the site's life, with a renewable project, most of the cost is up front. And so you're asking investors to invest multi-million pounds in an asset. And to do that and not have any certainty over income is quite a challenge. And most funders of projects aren't willing to do that. Or if they do, they're going to charge quite a lot for their capital. So a fixed price really gives that kind of certainty to investors, and investors are often funds like pension funds, for example, who are after a steady and known return. So that's what a PPA does. And these assets, when we build them, they have a 40-year life. So we don't need a fixed price to cover the full life of the asset. But something like 10 to 15 years, even 20 years, gives that initial investor that solid return, so they're willing to put that money up front and risk it in terms of the build.
And thinking about the fixed price that a CfD can deliver, the CfD itself isn't all that you need. What you also need is a CfD PPA, as we would term it. So the CfD is settled through a difference payment between a wholesale market reference price and the renewable project's fixed CfD strike price. So for the developer to actually achieve their fixed CfD strike price as their revenues for their power, they need to sell their power into the market at a price as close as possible to that reference price, which is called the intermittent market reference price, or IMRP for short, which is built up from two kind of day-ahead wholesale market indices. So therefore, a developer will seek what we call a CfD PPA, where an off-taker such as EDF or others pays the developer a price linked to the IMRP, subtracting certain balancing costs from that, to allow the generator to achieve close to their CfD strike price for the power they produce, and then it can deliver all that Andy's just said.
Yeah, and I'd just like to add to that, to what Tom's saying. We've really seen utilities and suppliers step up to the plate over the last couple of years. So we went to market recently for we've got some AR4 sites, actually. The CfDs started 1st of April this year. So we went out to market in Q1 and we were staggered by not only the amount of off-takers there were out there willing to offer CfD PPAs in the way that Tom describes, but also the competitiveness. And it was really interesting to see there were a lot of off-takers offering 15-year agreements, which is ideal because it fits with a 15-year CfD. The structures were also there to kind of fit much better with a CfD than they would have done 2 or 3 years ago. So I think the market's kind of adapting to that kind of position in supporting renewable developers alongside the government with the CfD.
I mean, how does the CfD with the PPA compare with the CPPA?
Yeah, and that's the that's the interesting question, and I think that the one we're all grappling as developers. It's one we're grappling over. So, I'll give you an example. We've got 10 Innova have got 10 sites which could apply for the upcoming CfD auction round. So AR7, which last week it was announced the timing for that will be applications in August this year. But the process is quite long and arduous. So although the application opens in August this year, potentially, depending on timing of appeals and things like that, the results might not come out until Q1 next year. So that's quite a long time for us to wait. So the direct answer to your question is, what's the difference? What's the difference in attractiveness? The CfD, as is often pointed out, does give us a government-backed, security for our price alongside the PPA from the off-taker. So that's really good. It's government-backed, so that's high credit. Is CPI index linked, which again is something that's really important for investors. However, it does only come round once a year, and actually it's been 18 months since the last one, so it does only come out round once a year or once every 18 months. By which time we have a whole load of sites. We're not developing our sites to time with the auction. The auction happens. So we've got all these sites that are ready to build. They got their planning consents, they got their grid consents, they got their land options. They've just been sitting there waiting for the CfD auction. So the CfD auction's brilliant. The price is great. But also it's not necessarily that flexible in terms of timing. Now, CPPAs, on the other hand, we can go to market and say at any point in time, okay, this project's ready, we're ready for a CPPA. Now, the challenge with the CPPA is they can take a long time to negotiate. So you often got 3 parties in the room. You've got the developer, you've got the off-taker, the final off-taker, the company, but you've also got a supplier sitting in the middle as well. And so that is the challenge around getting to a point where you can agree price, but then getting the contract negotiated in good time such that you're not then sitting across a CfD round. I think that's the challenge that's hitting the market at the moment.
And to pick up on a couple of points that Andy was making there, I think price is a key point of difference between CfD and a CPPA. So a developer such as Innova will need to choose between these two different routes to market for their project ultimately and pick what they think is best. But when a corporate would normally look at what do I want to pay for a corporate PPA, they would normally look at for power prices, future power price curves, determine the price they'd be willing to pay, because that's the comparator. And recently, forward power prices have, in the main, stayed broadly flat looking over the long term. However, on the other hand, the price developers are willing to sell at is the other part of the equation here. And in a corporate PPA, it's driven by the costs, supply chain, and these have risen, supply chain, cost of capital, inflation, etc. So we're hearing. And this is, we believe, leading to a bit of a growing bid-offer spread on corporate PPAs, where corporates are willing to pay at one price. Perhaps developers need a higher price to be able to, build the project profitably. So that's become a bit of a challenge. Whereas in the CfD, the prices that we've seen in recent auction rounds, have been a bit higher than the prices that we're more frequently seeing from corporates at the moment when bidding for a CPPA. So there's that's a key point of difference between a CfD and a CPPA. Another factor is what Andy also said about with a CPPA, there's often a third party at the table, what we'd refer to as a firming partner. This is where if the corporate PPA is a physical corporate PPA, then someone like EDF will need to take the intermittent power that comes from the renewable project, shape it into a base load block of power through doing some buys and sells in the market, and then sleeve it into the corporate's supply agreement to make that structure work. And that, of course, does lead to an extra set of agreements that need to be negotiated.
Is that needed for both for the CfDs and the CPPAs?
So it's not needed for the CfD, indeed. So there's in a CfD PPA, I guess you could say there's still multiple parties, because there's the government who's putting in place a CfD with the developer, but that is the document. You have to just sign it or not. But then there's only one other document, which is between the developer and their project and an off-taker, a CfD PPA. Whereas in a corporate PPA, you have the agreement between the developer to sell the power to the corporate, then the corporate on-sells that power to someone such as EDF, a firming partner who can do that firming from intermittent variable output to baseload, and then an agreement where that firming partner sleeves the power of that baseload block of power into the supply agreement. So there's an extra agreement there, if you see what I mean, an extra agreement to negotiate. So it adds a little complexity.
But from an EDF point of view, it's no real problem if they go down either route.
Absolutely, we're very happy to work with developers whichever route they're going down, be it working on a CfD PPA for a new asset where it has a CfD, or working to facilitate a corporate PPA where a developer and a corporate have agreed a price that they're both happy with.
Yeah, and I'd say on the same note, we're really happy to do either as well. And I think from a sort of funder risk point of view, at the moment, we're in a position where, I've mentioned we got these 10 sites and there'll be other developers with more sites and others with less. To put all our eggs in one basket is quite a risk, because one thing we haven't mentioned about the CfD is there's no guarantee of the price of the CfD. So the CfD is very much budgets are set every year. We don't know what the budgets are yet for this year, even though the auctions or the application window is coming up in July. And so it's a function of the budgets that are set, the administrative strike price, which is the maximum price that can be achieved, and that's set again by the government and hasn't been released yet, and also the competition. So if there's, if we're up against thousands of megawatts or multiple gigawatts of other solar and onshore wind farm, because we'll be in a pot with our solar sites with onshore wind as well, and the budget's lower than last year, then the outturn's likely to be lower, and maybe we'll end up with some of our sites not even achieving a CfD. So, like Tom said, from EDF's point of view, they're fairly agnostic, I guess, towards the route. I think we are as well. And for us, having all our eggs in that CfD basket is not a position we'd like to be in. So, we're doing what we can to encourage customers to the table. And we recognise the challenges for customers. And it's something I think, we'll also work with suppliers with to try and sort of bridge that gap if we can.
With the recent increase in the frequency of CfDs and prices, how will that affect the CPPA market? If developers, after leaning towards CfDs, how can they corporate still secure a renewable project in a CPPA and to arrive at an effective procurement strategy?
Yeah, maybe it's okay if I start with that one. So I think the challenge at the moment, and again, sort of coming back to looking at things, and it sounds very developer-centric what I'm saying, but the challenge for us at the moment when we do have a known auction, a known CfD auction, that given the kind of the drive towards net zero, I think we're fairly confident, and I think most people are, that this CfD auction should be a good one in terms of the number of projects that get awarded a CfD. So I think when we're faced with that, it's very difficult for us then as investors to then sink a lot of time and effort into a corporate who's potentially not willing to sort of pay the price that the CfD is going to outturn at. But I think it's not just a price thing, because I think we would, as I said before, we cannot really determine the price of the CfD with ultimate certainty. But it's also the process. And I think, Tom will admit that, we've been involved in CPPAs together. The process can take a very long time, partly because of the number of contracts that Tom alluded to earlier. but also none of those contracts are standard. So if we do a CfD, for example, we've done CfDs before, so we know the terms that are coming out. They vary a little bit each year, but that's all sort of slightly small variations, and it's very much take it or leave it. And again, with the utility PPAs that go alongside the CfD, they're relatively straightforward. They're going to pay us the day-ahead price. They're going to charge a bit of a fee. The terms are pretty well known in the industry. The corporate PPAs, where you're working with a corporate, again, who I've got a lot of sympathy with because energy contracts isn't their core business. So they're going to employ a really good lawyer, and there's some great lawyers out there. We're talking about a 15-year energy deal. And then you've also got the firming counterparty. Again, EDF offer that service. There's, numerous other off-takers who do that as well. We're happy with complexity, if there's value there. The normal, typical CPPA, I think, from start to finish, takes something between 9 and 12 months. That's a lot of effort for a business to sink in, pay lawyers, and also time to wait when we've got a project that's ready to build, but we can't actually reach financial close until we've secured that contract. So I think, as well as the price that we've mentioned earlier, and obviously the forward curve is relatively flat at the moment, so maybe the price that corporates are willing to pay is not what it was. I think if we can, between us, within the industry, achieve a kind of a greater speed to market so that we can get CPPAs wrapped up in, say, 2 to 3 months, I think they could be quite attractive for a developer who's got a project ready to go, but he knows he's going to have to wait 9 to 12 months for the next CfD auction. We'd happily go out and do very
Are things becoming slightly less bespoke, slightly more off the peg to make that, contractually? I mean, maybe more.
That would be great. But I think that's. I think we'd all like to do that. But there's a lot of willingness out there, but it's just not been done yet.
I think I agree with what Andy said there. No question. CPPAs are more complex to get negotiated, particularly, as you say, Andy, when a corporate some corporates haven't done many corporate PPAs before, so it can be a bit new and a bit different. We've on the standardisation of terms, we try to standardise ours that we use as much as possible, starting from what we think is like a really fair position to try to make things as quick and fair and easy as possible. It's not always simple though, because there are risks involved, and we have to be really transparent and open with those risks, where they're sitting and that kind of thing. So that can lead to things being a bit more tricky. But we try as much as possible to start from a fair position and a standard position, such that if we do more business with certain corporates or developers, we're kind of starting from the same place. In terms of what can a corporate do, in our opinion, to give themselves as good a chance as possible of securing a CPPA, I think there's probably a few things. I think knowing what you ideally want is important. So, do you particularly want wind or solar, for example? Do you know when you want this to start? Do you know how long you want it to be? The duration. Going in with that kind of knowledge of what would suit your business best, I think, is really useful right up front. I think, like Andy said, getting the right support as well is really valuable. Be it the right advisors to help with an RFP or a tender process, the right law firms with the right experience in corporate PPAs in the past who will have a good feeling for what kind of like market standard terms and positions are. I think that can be really helpful. I also think what's really useful is getting like the board on board early, such that you know what your approval and governance route is to get a corporate PPA done. Because we have seen challenges in the past where, for example, the energy procurement team's done an amazing job pushing forward with a corporate PPA, gets to the CFO and they go, hang about, what's this? Not a chance for this reason. So getting those key stakeholders internally on board really early is a really great way of being able to move at speed. If you've got the agreements in place and you've got the right advisors there and you've got your board ready to sign up to these, I think it gives the best possible chance of getting a CPPA done with a developer, especially bearing in mind that the developer's probably also going to be looking at potentially when's that next CfD round coming up, for the reasons we discussed earlier.
I mean, from the point of view of a corporate itself, you said obviously price is important, but are some prepared to pay a premium for certainty? Is that?
Yeah, I think there's a few reasons beyond just price that a corporate would choose a corporate PPA, because a few years ago there was a strong price argument because the price a corporate could agree a corporate PPA with a developer at was a bit below long-term projections of price when prices were very high, energy crisis times. That isn't the case quite so much anymore, but there are some other really strong reasons to still want to do a corporate PPA. For a start, like our energy market in GB is moving away from having lots of long-term forward liquidity that currently, and particularly in the past, a corporate could forward hedge their purchases of power, and they could gain that budget certainty by purchasing into the future. That forward liquidity is decreasing as more coal and gas come off the system, and renewables aren't necessarily selling forward so much, and instead there's more generation, more power going through the day-ahead market. So actually being able to lock in the liquidity, the confirmed power from a renewable project into the future is really valuable because you're guaranteeing yourself that liquidity and you're guaranteeing yourself some price certainty. So I think that's a really important factor as well considering a corporate PPA. Also, of course, you've got the green credentials, the renewable credentials that it brings. If it's a new project, you've got that additionality. It's marketing gold dust, isn't it? You've actually helped this new renewable project get built. If it wasn't for you, it wouldn't have happened, kind of thing. So you've been truly instrumental in helping that developer bring new renewable megawatts onto the grid in GB and taking us that one step closer to the government's ambitions of Clean Power 2030.
Yeah, and I think it's the additionality piece, I think, that has driven a lot of corporates, where we've seen successful corporate PPAs, is because that corporate or that customer has made a lot of statements about, wanting to do the right thing for the environment. And obviously, and I don't really want to trash green tariffs here, but if you're buying a green tariff, it's good. You are getting the megawatts, and they've been certified from the generator. However, that generator would have been generating anyway. What you're getting with a corporate PPA is you're buying into something that, without your help, and this is genuine because, as I was saying earlier, we can't develop. Our investors aren't going to invest until we sign something, whether that's a CfD or a CPPA. So it's genuine to say that when that customer signs that PPA, it allows the project then to go and build. And you're really making a difference because you're bringing new renewable power onto the system, which is going to displace gas. And it's funny to see it's sad to see actually how some customers kind of step back from their position a little bit. So we've been involved in tenders, and customers have said to us, additionality is so important to us. We lose out, and then we read in the press a few months later, or maybe a year later, that a corporate PPA has been signed with a CfD-backed offshore wind farm, which was already generating anyway. So there's no additionality, but again, sympathising with the customer, I think they've seen a price differential there because obviously they're going to have to pay the price to bring the new project on. And they've obviously chosen that, and maybe the financial director has got involved and chosen the cheaper and more kind of cost-effective option. And that's where the challenge lies, really.
Yes. I mean, what are some of the key elements of CfDs and CfD PPAs? And what does EDF do for CfD PPAs, Tom?
Yeah, so as Andy said, they're relatively standard in some ways. And we have a standard CfD PPA, which we believe meets the needs of developers like Andy at Innova, who have a CfD and need to sell their power through a PPA. A couple of the key features, in our view, are in the main, these are index-linked PPAs. They're linked to a market index, the intermittent market reference price. So, as you mentioned earlier, the developer needs to be paid for their power, the intermittent market reference price, to then, when they get their difference payment from government to the CfD, it adds up to just about their CfD strike price. That gives them that fixed price that they really need. So that's probably the key feature, really, of the CfD PPA, paying the developer the intermittent market reference price. Some other important bits as well. I think negative price protection is important. So under the current terms of current CfDs, a project doesn't get paid that difference payment between the intermittent market reference price and its fixed CfD strike price if those day-ahead prices go negative. So a generator needs to know when that happens, because if they didn't know and didn't switch off or curtail, then they would be basically paying to generate, because they would still get paid the intermittent market reference price, but that would be a negative number. So they'd actually be paying to generate. So a key term in CfD PPAs is to let the developer know, because EDF and other off-takers will monitor the market very carefully. Let them know when prices go negative, such that they can decide to curtail, to stop generating. Yeah, and actually we can, as EDF, we actually also offer to carry out that switching off or curtailment service ourselves for the generator. We can offer to control the site through trading point and control point services in addition to CfD PPA.
Yeah, and I think that negative price point that Tom picked up on there is really pertinent. We've seen a lot of negative prices this year. I think there was one on a Tuesday during the day last week, midweek, daytime negative prices, which I don't think anybody foresaw. There were some weekends in early April. We probably all remember it was sunny, but also windy outside, a little bit cold. But it meant there was a lot of wind on the system, a lot of solar on the system at weekends, and we saw, a day where, all the hours of sunlight were negative. And it was really important to us as a generator. We worked out how much we could have lost across our 3 sites if we'd have continued to generate. And, the numbers were relatively large, actually. So having that service from somebody like EDF is really important. So having that notification, and whether we choose to do it ourselves or whether it's done by the supplier is really, really important. I think in terms of the structure, Tom's absolutely right. We want to get paid the day-ahead index so that it matches perfectly with our CfD. I guess the other nuance commercially is the way balancing is charged. So, suppliers naturally will charge for balancing because what actually turns up in a particular settlement period is not necessarily what's been forecast, and it's very hard to forecast that with great accuracy. So there is an imbalance price. And that imbalance price can either be charged as a percentage of the market, which is the traditional way of doing it, or as a fixed price. Now, if it's a percentage of the market, it means that if the market's particularly high, as a generator, we're going to be paying more for balancing. And it means actually our CfD kind of price, if you like, is eroded a little bit more than it would have been. So what we've seen over the last few years is more and more utilities offering fixed price, so fixed price balancing for a long period, which then if we get a fixed price balancing, then we can lock in, we know exactly what we're going to get for every megawatt hour we generate because it's going to be the CfD price less that fixed price balancing.
What sort of long-term price are we talking? How long-term?
Up to 15 years.
Yeah.
Yeah,
okay.
So we have seen, I wouldn't say there's loads of 15-year offers out there because, again, I recognise, having worked for a supplier in the past, I recognise there's a lot of risk that they're taking on. But yeah, it's fair to say there are. They do exist. They do exist to match with the length of the CfD, and obviously they're attractive. And then there's a payoff for us as a developer. Okay, we can fix it longer, but the price might be slightly higher because the supplier's taking on more risk, or we can go shorter and then hope that when we come to renew, the price is going to be there again.
And I completely agree with what Andy said there about the balancing discount. From a supplier or off-taker perspective, what you tend to see is that the cost of those balancing actions kind of actually correlate quite well with wholesale market prices. So if prices are higher, it tends to cost a bit more. Prices are lower, it tends to cost a bit less. Also correlates with volatility as well. So from a supplier perspective, an off-taker perspective, a percentage link works really well because it more directly correlates with the costs we incur to do that balancing. But we absolutely understand the need of the developer to have as much, let's call it bankability, fixed price certainty as possible for that investment case. So yeah, we can offer different types of a balancing discount. But then of course, when it is a fixed pounds per megawatt hour discount, there's a little bit of extra risk. So a little bit more built in there. But to pick up on another point, the negative price periods we're really seeing them increase. I think we had, it's 2025, we've had a very sunny kind of March, April, early May period, which has been lovely from a personal perspective to get out in the sun. But what it has meant is we've seen the real power of solar cannibalisation. And that's manifested in suppressing the power prices, negative prices, peak prices being being lower than baseload prices, basically meaning, the hours in the middle of the day costing, or being worth less than the hours overnight, even though that's not when you have a lot of consumption, is it? And that's the power of solar cannibalisation, basically. And it's not just the GB rollout of solar that's led to that. It's also the interconnection with Europe. So there's a lot of rooftop solar being built in Europe, particularly the Netherlands, places like this. And when there's a lot of sun in the Netherlands, you'll get a lot of solar coming across the interconnector, further cannibalising prices in GB. So we've been seeing this over the last few years. We've been seeing that cannibalisation really increase. And this is where it's so important to be doing our analysis correctly to factor those kind of effects into balancing discounts and the like in PPAs.
Yeah, no, I agree with that. And it's quite fascinating, actually, to watch the change of the price shape, basically, because, I've been knocking around for a few years. And I remember when, prices just followed demand, and like you say, to see daytime prices in a weekday be well below nighttime prices is a real change. And these are the kind of things that, 5 or 10 years ago, traders said, this will be coming in the future. And I don't think anybody quite believed it. And we're actually seeing it now. But I think what the next phase is quite interesting, because you're going to see, obviously, demand's going to be made up more and more of flexible kind of demand, like electric vehicles, for example. And also, we're seeing a lot of BESS deployment, so battery energy storage deployment. And that's, if you look at a lot of the predictions, that's going to go up exponentially over the next few years. So it's going to be interesting. There's going to be this kind of, you might get more cannibalization one year, but then there might be more deployment of BESS assets, and it might kind of, might smooth that out a little bit. And,
yes.
I think that what's certain is the future is quite unpredictable. And I think it's very hard to know what's going to happen next.
I believe there are some changes planned and some uncertainty around the latest CfD allocation round. I mean, as of today, what's the latest news on the CfD allocation round, and do CfD delays risk the UK missing its Clean Power 2030 targets?
Yeah, maybe if I start on that from a sort of developer's perspective, it's been quite frustrating this year, because we're so used to, over the last couple of rounds that they've, since they made the manual 3 years ago, they'll be coming every January. We've had the opportunity to apply, and then what tends to happen is the process runs, and then by the summer, whether you got a CfD or not. And obviously there's been quite a delay this year, and part of that is due to REMA. And they wanted to make some decisions on REMA before they launched the latest auction. So we do know the timing now, which is fantastic. We know that the application window, so that's the time that, as a developer, we need to make sure that we've got all our planning permissions, all our grid permissions, and all our land options. They need to be ready, they need to be signed, but they also need to be evidenced. So August is when we're going to have to apply as a developer for our new CfDs. And then there's a process that's run. And, I was talking before about the fact that there's certain budgets that the government put forward. And you may get a situation where the number of applicants and the value of those applications are under the budget. And therefore, everybody who's applied gets a CfD. And then the process is over very, very quickly. I don't think we're going to see that this time round, because we've looked at the data, and there are a lot of qualifying onshore wind and solar assets and offshore wind assets, actually. So what tends to happen is that the amount of applicants, or the value of those applicants, will exceed the budget, and therefore they'll run an auction. It's called a seal bid auction. But actually, before you get to that stage, there's we're talking hundreds, if not thousands, of projects applying. And the paperwork that you have to put forward is I'd say quite immense, because I oversee it within my team, and occasionally you get situations where the government or the EMR body who's looking at those applications haven't seen everything they like about a project. For example, there might be some planning application missing, and so they might say to a particular project, "Okay, you don't qualify this year." Because the CfD is so important, the likelihood is that the developer would look at that and appeal against the decision. And so what you actually get, if you look at the timeline that's been published for AR7, I think there's about 6 or 7 versions of that timeline. And we tend to always, in my experience over the last 2 or 3 auctions, we've always tended to end up at what they call the longest timeline, which means that there's been a first set of appeals against non-qualification. Those haven't always been upheld, and therefore you get a second wave of appeals to Ofgem, and that slows down the process, and then you get the sealed bid window. And I think if we go to that timeline, then we're looking at sealed bids being put forward in December, late December, and the auction results coming out in January. So that's quite a long time to wait. But again, the value of the CfD is there, such that we're happy to wait. But it is, I think, from our point of view, it has been a little bit frustrating, because we've had lots of projects ready. We've been waiting for that application window, and it just hasn't happened to the timing that we'd have preferred.
And to meet Clean Power 2030, allocation round 7 is so crucial. It's so important. It needs to support as many new renewable megawatts as possible. So, government needs to make it the most successful allocation round of all time. AR7 and AR8, which will be a year after AR7, are absolutely crucial for Clean Power 2030 to deliver the huge renewable growth that we need. It's like a doubling of onshore wind, a tripling of solar, a tripling of offshore wind, compared to like the levels we have today. So that's a huge amount of build out by the end of the decade. So a key question will be around the capacity ambitions and the budget the government is willing to spend on the different pots within the CfD to make that happen. And, when we're seeing delays like we have been this year to the CfD allocation rounds, this is where it's so important for there to still be a really strong corporate PPA market as well for Clean Power 2030 to be achieved.
So that it ticks along in between.
Absolutely. We need that. We need developers to be incentivized to come and invest in new renewable projects in Britain. And that can't just be dependent on the CfD. Corporate PPAs are a really crucial route to market for new projects as well.
Yeah, I agree. And there is potentially a bit of responsibility on big consumers. I'm thinking consumers who are going to start consuming more over the next few years because, they're obviously adding some pressure onto the grid. And, I think those that are kind of come with, environmental pledges, it kind of fits quite nicely if they're able to kind of, let's say they're expanding their operations because of EV or because of electric heating by, 30 gigawatt hours over a particular period, then, to bring on a, say, 30 gigawatt hour wind farm or solar farm at the same time kind of fits quite nicely. And so we're talking to some customers at the moment and we're seeing that as a story. It is difficult to say the consumption that I'm consuming at the moment. It's really hard to lock in that price because I don't know if the price is going to be higher or lower than I could have otherwise bought it for. But if I've got new demand coming on, then matching that off with a new renewable development works quite neatly. So I think one of the other features of the UK market over the next few years is, as well as this kind of displacement of gas that we're seeing at the moment with new renewables coming on, when we get beyond 2030, then we're seeing that push, that increase in demand. And, all those stats that Tom just reeled off there, the other thing that people often miss is that demand's going to double between 2030 and 2050. So, we've got this big kind of gate, if you like, at 2030. It's not like we can just say, okay, 2030, we're done now. It's like then there's another push to keep that kind of renewable kind of growth at pace with demand. And I think that's where maybe corporates have got a real, or customers have got a real kind of role to play in, matching that new demand with new projects.
And this demand's through electric vehicles, heat pumps, that sort of thing.
Yeah, and some new industries like data centers as well. So it's that general kind of data-driven world that's kind of creating this, and electric vehicles and electric heating.
Yeah. And just flicking back to the CfD again. So I think there are some things that are going to change in this iteration, this allocation round of the CfD. Mm-hmm. So I think so repowering of wind projects are now included. I think there's a change to the budget methodology. So instead of setting a pounds budget out up front, I think governments instead going to set a capacity ambition and then finalise the budget when they know what actual bids have been submitted to, which I think is positive because I think it shows that they have ambition to bring on enough real megawatts to, keep us on the.
Can you explain repowering?
Yeah, it's when a wind site, for example, has come to end of life. You need to take off the old kit because it's no longer any good, and then potentially build again on the same site. So that's repowering of wind there, for example, because quite a few older sites will be reaching that end of life now, where they're no longer operable. You can't keep maintaining them, flogging a bit of a dead asset. But then there are some other changes as well that are still being considered, I think. So I think government's considering still relaxing some of the eligibility criteria for fixed bottom offshore wind. And that could, particularly for projects that haven't obtained full planning consent. So that could potentially open up a load of extra projects and gigawatts that could be entering the auction. And I think they're also considering an extension of contracts from 15 years to potentially longer, the CfD contract, that is, which could be really beneficial to developers in making the investment case work for more assets.
Mm-hmm. Yeah. And I was going to bring that one up. I think 20 years I think is has been consulted on and is still under consideration. Not for this auction round, it has to be said. I think it's for future auction rounds. But I think in terms of looking again at our sort of central topic today and the attractiveness of CPPAs versus CfDs, I think often it's quite a stretch for a customer to kind of commit to 15 years. And again, completely understand it. A lot of businesses don't know what they're doing in the next 5 years, let alone 15 years to commit to that length of time. I think if the CfD is extended to 20 years, obviously great for investors, potentially great for consumers as well, because it might bring the price down. But again, that's something that customers potentially have got to compete against. So I think it's just something to put on customers and suppliers' radars. I think the other reform that's potentially coming down the tracks as well is protection against negative prices. So one of the risks for us as a developer with a CfD, as we've already talked about a little bit, is there's going to be negative prices. So for example, if we build a 20 megawatt solar farm, we would expect that to generate roughly 20 gigawatt hours in a normal year. But if we see a high prevalence of negative prices where we're not supported under the CfD and we'd actually have to pay to generate, so we'll get curtailment, then potentially that reduces the volume and the value of that particular asset. So that's something that's a risk. The government are acutely aware of that risk and therefore are looking at ways that they can perhaps take that risk away from generators. And one of the ways would be, for example, to say, okay, during those negative prices, we still want you to switch off, but we'll pay you as sort of a deemed rate, as if you had generated. So those are things that are being explored. And again, I think the CPPA market just needs to be conscious of those as well, because if going into a CPPA and negative prices are, okay, you've got to curtail and you're not going to get paid, then that potentially is a risk for the attractiveness of CPPAs.
So I'd like to thank you both today for such an interesting discussion. Thank you, Andy.
Thank you, Tim.
And thank you, Tom. And for the latest news and views, go to Energyst.com. And Tom, where should people go to find out more about EDF?
Yeah, to hear more about EDF and get in contact about PPAs or corporate PPAs, you can find us on LinkedIn, so EDF Wholesale Market Services, or on our website, edfenergy.com.
Thank you.